This $35 stock has crazy potential. Nvidia invested in them, and they have an Nvidia-backed company as one of their tenants. So they are a data center supplier. They have a 15-year contract worth up to $10 billion or more with CoreWeave, who has also been invested in by Nvidia. A lot of Nvidia connections here. I think this company has massive potential, even though it's up a lot right now. It's still forming a flag, and it just had earnings. Let's jump into the chart. This is not financial advice, but looks good.
This is Sam Putnam.
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 So I think this is the clearest part of Applied Digital. As you say, well, it's up from 5 to 35, right? But when it's up that much, percentages start to sound silly. You know, when you talk about open door and you say, oh, this went from 2 to 6, I wouldn't buy that. It's like, well, you're right. If you bought it at 6, it wouldn't be a good time to buy, but there were opportunities. There was a second flag at 540, and then it went to 10, so it almost doubled from there, depending on how you measure it. So look, I mean, there's a ton of volume here. This is billions, you know, so $5 billion a day or more on open door. And on Applied Digital, quite a lot of volume as well. So somewhere in the $3 billion up here. And they just had earnings, and the earnings candle is basically holding. If we set this at 35 and change, you know, it's just below there. So that's a pretty important level. If it can get beyond, I mean, it closed down at 32. So 35 is really the opening on the morning after earnings. So that's generally why I wait for earnings to close. In my opinion, that makes more sense to not only risk off that level. So 33. So, you know, it's sitting right there. But also because if you look at, say, Meta, well, it just went down. But if you look at Microsoft, this is the example I was trying to bring up. This thing went up. No, it went down. Down on earnings and after hours. What am I trying to tell you guys? If you look at is Apple might be the example I'm thinking of. Okay, yeah, this is the example I'm thinking of. Popped up after hours, but if you buy that, you know, anticipating a move up at open, you're cooked, right? So you really want to wait for a candle to close, a full day to close, and that's the close. So that's the level down here at 270, which it was basically trading at before. So there's been a lot of earnings. My head is a little scattered. Google obviously had an awesome earnings to start and then exhibited the behavior I'm talking about here to some extent. And then Amazon sort of closing a little lower, kind of the same idea. You want to risk off this level, not this level. Now, once it gets over here, then you can risk off this level. But because there's a lot of volume here, this is probably would be called the high volume close. So this is the close. You know, it opened up here, closed down here, and it has a high volume. Whereas if you looked at GM, this is obviously the high volume day, and this is the close. So you risk right there, and look, I mean, the stock goes up. So we'll see what happens here, but you have a very clear defined risk. So all that to say, this is Applied Digital. This is the risk level down here, 32 and change, and it's holding over that. Okay, it did undercut it, but it bounced on this moving average. So there is buying demand above that line, which a lot of people have this line. This is a 20-day moving average. So it's a very common. It's almost as common as, you know, just putting the volume on your chart, which obviously comes by default. Moving averages come by default on Robinhood too, and a lot of brokers. So as far as actual revenue, it's up year over year, but it's not a lot, right? 50 million. They are running at a loss, but they're also sort of part of this AI boom, sort of speculation boom, where it's like, yeah, could everything be hunky-dory and OpenAI is able to become hugely profitable, then all these companies downstream are going to be beneficiaries of that. including Applied Digital, including CoreWeave. Applied Digital is a recent sort of mover. It had some euphoria, of course, in the COVID times, but only recently has it really made a massive move. And that separates a little bit from if you look at like quantum companies, they weren't really doing anything in the COVID times at all. So, does this mean that this is a little bit more of a lasting business than quantum? That was just that wasn't a fair example because quantum doesn't have a lot of revenue, right? If any revenue. So Applied Digital at least has 50 million. So these quantum companies have a couple million of revenue. And these data center contracts are lucrative. And then as far as will any AI companies, like consumer AI companies, actually, make a big profit besides OpenAI off this data center usage? That's to be determined. But OpenAI could go public too. They've been talking about that. Could be the biggest IPO ever. So here's the deal. Nvidia is the investor. They had about $50 million dollars worth. And then they participated in a funding round. I think still this is their total stake. So sounds like they've done multiple rounds. So they're definitely committed. Now, I think this elite partner status might be kind of thrown around. Obviously, they're using NVIDIA GPUs and stuff because they invested in them. But what's important here is CoreWeave CoreWeave has some debt. They did get that $14 billion Meta contract, but still, CoreWeave needs to succeed for Applied Digital to succeed. So, yeah, this contracted revenue needs to become actual revenue over the next 15 years. That's a long time, but that's what needs to happen for this Applied Digital to succeed. They can't succeed without OpenAI succeeded. Really, that sounds crazy, but that's kind of the sort of, combination of events that now has to happen. So it sounds crazy, but kind of makes sense. Could Anthropic overtake OpenAI and use all this compute? It could. I guess that's another alternative that doesn't involve some scrappy startup just coming out of nowhere. As far as what else they sort of do, I kind of think it's just the data centers. This isn't like Galaxy Digital where they do crypto trading or anything like that. This is a big $15 billion contract with CoreWeave. And, Galaxy Digital has like a couple $100 million that they're getting from leasing their data center to CoreWeave. APLD is getting 15, so billion, big difference. 11 billion, sorry, 15-year lease. Now, as far as other locations, they are a little bit distributed. So North Dakota as well as, I guess this is also in North Dakota. Well, I thought that they had data centers elsewhere, but it might be that they are still building that out. So we'll see what happens. One of the risks with data centers being built is people don't want data centers in their backyards. And it seems like the eastern US is more favorable to getting these built quickly, whether that's faster permitting or I don't know what it is. Alberta in Canada is favorable, and Meta is trying to get a data center built in Alberta. So I don't exactly know how North Dakota stacks up in that conversation. It's an important thing to track, though, because if they can't build them, they can't lease them. Obviously, there's a lot of space up there, but still, it's also cool. That's part of the reason why people like Alberta is getting some of this business besides the relaxed permitting in that province. And they need some actual money as well. They need to not have losses. So this is great to have 40 versus 25 year over year. But when you're talking about an $11 billion contract and you're making $50 million a quarter, it doesn't quite stack up in the way it sounds like it should. Nvidia's margin is something like 70 to 80% on his GPUs, so this doesn't quite track. But APLD is the idea. I know it's up a lot, but it held over earnings, so that's a clear level. And you can sort of use that level despite the amount that it's up. It sort of overrides that. So if you like these ideas, hit that like button. If you want to see more, hit that subscribe. And if you want to work with me, head over to stockscommunity.com. You can join for $25. See you in the next one.
This is Sam Putnam.
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 This is Sam Putnam.